Welcome to Breaking Wire. Please subscribe to the channel and press the bell icon for more updates. North American car manufacturing is shifting, undergoing a transformation that is both rapid and profound. These changes are happening in ways we haven't seen in decades, signaling a new era for the industry. Japanese automakers, who were once deeply rooted in the US and helped shape its automotive landscape, are now increasingly eyeing Canada for future investments and expansion. Years of shifting economic and political winds, from trade agreements to labor costs, have pushed these companies to reconsider their American presence and look northward. The US risks losing major industrial anchors that have long supported local economies, while Canada is stepping up as a new contender in the automotive race. The Canadian government is offering attractive incentives, tax breaks, and a sense of stability that are becoming harder to find in the US market. This shift could redraw the economic map of North America, putting thousands of American jobs at risk and changing the fortunes of entire communities. Policies from Washington, especially tariffs and regulatory changes, have made it more expensive and complicated for international companies to build in the US. As costs rise and uncertainty grows, companies are rethinking their strategies and long-term commitments. Decisions made in Tokyo boardrooms will have ripple effects, impacting factory towns from Ohio to Alabama and beyond. This is about more than just cars. It's about the future of manufacturing, jobs, and economic security in a globalized world. Government policies, even those made with the best intentions, can have far-reaching and sometimes unintended impacts on industries and workers. As Japanese automakers weigh their options and consider where to invest, the stakes for the American economy and its workforce are incredibly high. The competition for jobs, investment, and technological leadership is fierce and only intensifying. The outcome of these decisions will shape the industrial strength and economic future of both the US and Canada for decades to come. The ground beneath North American manufacturing is shifting, and the world is watching closely as this new chapter unfolds. Trump-era trade policies sent shockwaves through the auto industry, creating a ripple effect that was felt far beyond Washington, D.C. Tariffs on steel, aluminum, and auto parts drove up costs for Japanese automakers in the U.S., making every vehicle more expensive to produce almost overnight. Building cars in America suddenly became much more expensive, squeezing profit margins and forcing companies to rethink their strategies. These tariffs disrupted global supply chains, throwing the system off balance and causing delays, shortages, and uncertainty at every step. Japanese companies known for efficiency saw profits shrink and pressure mount as they struggled to adapt to the new reality. The unpredictable trade climate made long-term investment risky, with executives unsure if their next move would be upended by another policy change. When trade rules can change overnight, companies hesitate to commit billions, putting expansion plans and new jobs on indefinite hold. Instead of attracting investment, tariffs pushed automakers to seek stability elsewhere, with Canada and Mexico emerging as safer bets for future growth. The financial logic for building cars in the US weakened as companies crunched the numbers and saw better opportunities across the border. Automakers began considering countries with more predictable trade relationships, where they could plan for the future without fear of sudden disruption. The tariffs didn't bring manufacturing back. They gave foreign automakers a reason to leave, taking jobs and investment with them. This set the stage for a potential exodus of jobs and capital, as entire communities braced for the impact of plant closures. American workers are left to pay the price for a trade war they didn't start, facing layoffs and an uncertain future as factories go dark. Policy meant to protect US industry ended up driving it away, leaving behind empty lots and broken promises. The lesson is clear. Stability and predictability matter more than ever for companies deciding where to invest and create jobs. Japanese automakers are rethinking their American operations from top to bottom. Companies like Toyota, Honda, and Nissan have been pillars in US manufacturing for generations. But rising costs and policy instability have forced a tough question. Is America still the best place to build cars? The US is a huge market, but if costs keep rising, the advantage disappears. New investments are on hold as companies weigh their options. It's not just about saving money, it's about managing risk. Political volatility in the US makes long-term planning difficult. Diversifying manufacturing helps protect against sudden policy shifts. Reducing reliance on US factories is a defensive move. The result? A quiet but significant pivot away from America. New investments are going elsewhere, signaling a potential long-term decline. Japanese automakers want partners they can trust for the next generation of manufacturing. While the US creates uncertainty, Canada is seizing opportunity. The Canadian government is aggressively attracting automotive investment with grants and tax credits. Canada offers a skilled workforce, especially in Ontario's industrial heartland. A robust network of suppliers and research centers makes setup efficient. Canada's leadership in clean energy appeals to automakers focused on sustainability. As a member of major trade agreements, Canada offers access to global markets without tariff threats. This stands in stark contrast to recent US trade disputes. For Japanese automakers, Canada is now a smarter business decision. It's a stable platform for producing cars for North America and beyond. As the industry shifts to electric vehicles, Canada is positioning itself as the new hub. If Japanese automakers scale back in the US, the economic fallout will be severe. Auto plants are the lifeblood of many towns, often the largest employer. Closures would trigger waves of unemployment and hardship for thousands of families. The impact ripples out. Suppliers, local businesses, and public services all suffer. Tax revenue from these factories funds schools, roads, and emergency services. When a major employer leaves, communities face budget shortfalls and service cuts. The economic decline can become a vicious cycle, making recovery difficult. America's reputation as a manufacturing leader is at stake. The presence of foreign automakers once symbolized US economic strength. A reversal sends a negative signal to global investors. The long-term consequences could undermine America's ability to compete. The stakes for the heartland couldn't be higher. Behind the headlines are real people, American workers whose lives hang in the balance. Many have spent decades at these plants, relying on good wages and benefits. A plant closure means facing an uncertain future, with few comparable jobs available. The loss affects entire families and communities, creating stress and hardship. In factory towns, the social fabric unravels as people move away to find work. Workers who did everything right now feel betrayed by decisions made far away. Their loyalty and hard work seem to count for little when corporate strategies shift. Displaced workers may never regain their skills or stability. Younger generations see the instability and avoid manufacturing careers. America risks losing its industrial skill base for good. The damage isn't just economic, it's personal and generational. The future of American manufacturing workers is on the line. Policy decisions today will echo for decades in these communities. The recent shift of auto investment to Canada signals a major realignment in North America's automotive landscape, with far-reaching consequences for both countries. The future of car manufacturing will be shaped by factors like political stability, open trade, and strong government support for electric vehicles, all of which are now at the forefront of industry strategy. Canada is rapidly building a comprehensive electric vehicle supply chain, from battery production to final assembly, making itself increasingly indispensable to the global auto industry. This momentum could see Canada overtake the US as the leader in advanced auto manufacturing, especially in the fast-growing electric vehicle sector. For the US, this is a wake-up call, a signal that the status quo is no longer enough to stay ahead. To stop the outflow of investment and jobs, America must create stable, forward-thinking trade policy and match Canada's aggressive incentives for automakers. Investing in workforce training, new skills, and strengthening domestic supply chains is crucial for long-term competitiveness. The US can't afford complacency. It must fight to remain the top choice for automakers, or risk falling behind in this new era. The decisions made now by industry leaders and policymakers will determine if America stays an automotive powerhouse for generations to come. The transition to electric vehicles is a once-in-a-generation opportunity to redefine the industry and secure future prosperity. If the US fails to act boldly, jobs, innovation, and economic leadership will inevitably move north to Canada. The road ahead demands vision, investment, and a renewed commitment to American manufacturing excellence. The future of the industry and the country depends on the choices made today, shaping the destiny of North American auto production.